Live. Had some technical difficulties and was able to now power through it. Just a few minutes behind the normal schedule, but I'm here. So just ended up rolling with the punches. I've got YouTube in front of me, so experimenting with this. Actually, just love this site, so going to end up utilizing this more. And then got the Facebook over to my left hand side. So everyone who is on here, I am going to be talking about the 6 lessons learned on a recent 80 unit acquisition. And then at the end, we'll have some question and answer as well. So wait for a few folks to jump in on Facebook. That's over to my left. I love you guys over there. And then also YouTube as well. So keep let some individuals start hopping on here. I am Sterling White. If you're just now coming across me, that's my fault, not your fault. So just a little bit about myself briefly, especially for those of you who are on YouTube, relatively new to me. So just a little bit about my background is I was born in, and also let me know that you can hear me, those of you who are on Facebook, loud and clear. So just comment below and let me know that you can hear me good. And so, yeah, born and raised here in Indianapolis, Indiana, where I was living in the not so good parts of the city, where the neighborhoods where you wouldn't necessarily want to walk your dog at night or even during the day. So through the course of that, lower income housing, grew up on welfare, food stamps, Section 8, and any other type of government assistance that was provided. So had a single mother that raised just my brother and I, and my father wasn't much in my life, and the moments I do recall of him weren't very pleasant. So thanks for joining Ariel Hernandez on Facebook. I see there's a couple more individuals that are hopping on here as well. So truly do value everyone's time in gaining some knowledge and some personal, just sharing my experiences as a investor in this field, this industry. So I'll go more to my background as well. So to anything I wanted above and beyond of the as a kid, clothes, shoes, those items, I had to figure out a way to earn money in a legal sense, because there was tons of illegal activity that was going on around me, but decided to not take that route. And that's where the whole entrepreneurship birth came into existence, where my very first product was Kool-Aid. Yes, Kool-Aid, where I had these plastic bags. I would put Kool-Aid and also sugar inside of them, and then I would sell that to kids around the school. Second product was Pokemon cards, and then I even play cards to earn money as well, so I can buy those things. And to fast forward, how I got started in real estate, which was 2009, so a decade in the game at this moment, is got started on the construction side, get my hands dirty. My roommate actually pushed me into it. His father owned a construction company, so I was more of really working as a grunt, so providing the mortar to the bricklayers and also doing other low value jobs, such as, which I have great respect for those guys, of course. And yeah, so I had other jobs such as doing demolition on commercial projects, fire stations, things of that nature, fire stations, churches. And then I knew I wanted to be in real estate, but that was not my niche that I wanted to be in. So that's when I was able to find a mentor. And those of you, also, I want to mention, I will be having giveaways today. So those of you who do share the stream that are on Facebook, I will be giving away I recently rolled out a 31-day challenge in which you share the stream, and then also direct message me that you also shared the stream as well. So you got to do both. Share the stream and also direct message me that you share the stream. I will I will have you in my 31-day challenge for completely free. And what the 31-day challenge is I will be giving you daily video missions on very tactical things that you can do to go direct to owner to buy their properties also the types of contracts, the things to say when you're speaking with the owners, and all those types of was it elements involved of buying properties, whether that's single family homes or multifamily. But this challenge is more on the multifamily side. So that's what that challenge is going to be about. It's over the course of 31 days, and you would have direct access to me as well. So jumping right into the real estate side is found that mentor, started working for that individual completely free. They didn't have to they didn't have to charge me anything. So I worked in their property management company, and then also oversaw their construction on their apartments, and then really transitioned to how I bought my first single family house, which was in 2013, I would say, 2014, excuse me, 2013, 2014, where I had negative funds in the bank account, but was able to use that mentor's cash to fund the purchase price and also put the additional capital into it to renovate it. To then we rented it for $850. So house was $25,000, very cheap. You can get those properties here in Indianapolis, and it was not just a shed. For those of you who are on the West Coast and prices of houses are all the way up there. Hey, great to see you, Tyrone Collins, and yes, so someone mentioned for me to tell a little bit more about myself. So to fast forward through all that, got started construction, shifted to single family home investing. First property, had no money in the deal, and then fast forward to where I am now, own just over 500 units. That is multifamily and single family, majority multifamily at this present time, where I purchased 75 between 7 apartments that have units between 75 to 200. And on top of that, the valuation of my current portfolio is over $26 million, and have raised over $10 million to fund those deals. And the reason I'm saying that is I'm not bragging by any means. One thing is I want to share my experiences, my failures, which I've had a lot more failures than I've had successes to get to where I am. And then also, I'm not perfect by any means. I still make mistakes even to this day, and I'm human just like you are as well. So just want to share what I've encountered in this industry in hopes that it can spark maybe a fire inside you, or you can use some of the tactics that I use, which is going in today's market direct to owner. So the topic today, for those of you who are on YouTube and also Facebook over here to my left, is the lessons that I've learned on a recent 80 unit acquisition that was back in October. So we're just now really getting through the reposition, because this was a deep value add. So it needed quite a bit of work. So let me go ahead and go into, and one thing I want to mention for those of you on Facebook, just want to state again, share the stream, and also direct message me that you shared the stream, and I will be picking 2 people to join my 31-day challenge, which there is normally a charge for that, but I will pick 2 people to join that for free. Tyrone, you're currently in that. Tyrone Collins, you're currently in that challenge as well, where you work with me personally, and we really go through the ins and outs of purchasing your first deal or even your next deal as well. So to where you'll get the properties at a deep discount, because we all want deals at this moment, good deals, not to overpay. So the first lesson that I learned on this, the 80 unit acquisition. Oh, got a few questions that are rolling in here. Awesome. And everyone, do not hesitate to ask your questions. I will answer those at the end of this stream, whether you're on YouTube right in front of me and also Facebook. So the first is know the market. Knowing the market is very crucial. So we, both my partner and I, were primarily in Indianapolis, Indiana. That's where all of our holdings are. We have some in Dayton, Ohio, but Louisville, Kentucky, which is where we bought that 80 unit in October of last year, it was a new market to us. So knowing the market is very crucial. And what I mean by knowing the market is understanding the economics, such as how is the city? Is it on an uphill or is it on a decline? Meaning looking at the population growth, looking at the job growth, ensuring that there is a low unemployment rate, and that also the corporations that are in the city and businesses are diverse. Meaning that they're not heavily reliant on, let's say, manufacturing, that there's healthcare, manufacturing, there is food, there's retail. So to have a good mix is always good. So Detroit, for instance, was heavily reliant on manufacturing. So that was one of the reasons when that went down, they got hit pretty hard on that side. So knowing the market, and one thing that we did additionally, me personally, was knowing the market on a high level, but where you're going to invest in. So going to the actual sub market. So on our side, we target, as I alluded to, apartments that are 75 to 200 units, working class, meaning that the rents are, or another word for that is workforce housing. So rents between about 650 to 900 to 950. And then from there, so we take out all the luxury houses and all of the income restricted properties, which is a different type of program. And also Section 8, we don't deal with that side. Nothing wrong with Section 8, but that's just not our investment model. So from there, we go really narrow, and that allows us to be focused on, okay, these are the types of neighborhoods that have those specific apartments. And then from there, we look at, we go even narrow and say, okay, in this neighborhood, how are the schools? How's the crime? If the crime is very volatile, if the crime's very high in the area, that it's going to be tenants that may be a little bit rough on your property and more management intensive. So the things to look at, you can use Trulia.com, type in the property address, and you can actually scroll down to the bottom of the page and be able to see the crime. It's like it's different shades. The darker the blue, it may be different for different cities, but normally the darker the blue, the worse the crime is. And then also you can go search, do a simple Google search to see the schools that are surrounding that property as well, to determine whether they are good or not. If they're bad, then you have to think from the residents' perspective that they have kids. So they want their kids to go to the best schools. What tends to happen is the better quality resident or tenant will want better quality schools. So that's something to look for when you're going into the specific submarket neighborhood. So also comment below. Let me know where you guys are from. I'm here based in Indianapolis, Indiana, where it is not phenomenal weather outside. It can always go either way. It can be 80 degrees one day, and then it can go all the way as low as 20 degrees. So huge swings in one day. All right, so there's that on the first point. And then the second is going direct to owner is the way to go. And what I mean by direct to owner is off market. So there's ways that you can go on market to buy a deal, which when you're purchasing on market, that is going through a realtor or maybe a broker. For us, that has been super competitive, and prices are just getting really pushed up with highest and best, and then also final call to offer. So what we've always done is just go direct to the owner. It's more difficult, but you control your own destiny. And so we've been able to acquire 4 deals in the past year and a half, about just under 300 units between those 4 properties, all going direct to owner. So that has been our bread and butter. And that's something I would recommend for others as well, is if you can utilize the channel of going direct to owner, there's multiple ways. There is direct mail that you can use. And there's also, there's cold call that you can use, which is our favorite. So those are a couple channels to name a few. That's more on the outbound side. So interrupting someone who may not even be in the market whatsoever to sell their property. So you've got to convert them from being not interested to being interested. So, which goes into my next point. Thanks for joining Christine from Naples, Florida. So I see a couple more people that are jumping into the stream, where I'm going over the 6 lessons learned on a recent 80 unit acquisition. And those of you who do share it on Facebook, I have recently rolled out a 31-day challenge I will be picking 2 individuals to join that for completely free, where you'll be able to work directly with me in terms of being able to find your first deal or even your next deal, and have the necessary tools and strategies to be able to accomplish that. So, and rolling into my third point, which is okay, yes, that is my third point, is persistence. So when going direct to owner, it can be multiple touches that's involved. For instance, that 80 unit acquisition that I'm going on the lessons on took 6 attempts just to get in touch with the decision maker to give the pitch that, hey, we just entered into the market. We have cash that we're looking to deploy into apartments that fit this specific criteria. Would you consider on selling? No is what they said up front. So from and as I alluded to, that was 6 attempts just to get in touch with them. And that was over the course of, I would say, a month and a half of those 6 attempts. So it was quite a bit on a weekly basis. And then it took 4 months to transition them from being not interested to them being interested. So it took multiple follow-ups within that 4-month period. And then once we got it under contract, it took another 3.5 to 4 months to actually close. So persistence throughout the whole process. And also when you're following up with, and also please give those likes on Facebook. I love those likes and those loves and those wows. Those wows are so awesome where you're like, oh. So give those on Facebook. That definitely, so other people can see this content, because I'm here to deliver the fire in the absolute gym. So yeah, persistence is key, which I'm sure everyone has heard of that. Persistence, follow-up, and then also being creative with your follow-up is very crucial as well, because if you keep constantly calling and saying, hey, now are you interested in selling your property? Now are you interested in selling your property? The owner is not going to be very happy, and that's when they'll just end up blocking your number. So one thing that I've always liked to implement is, hey, I'm going to be right around the corner from your property. I would love to put my hand in your hand and get a face-to-face meeting, essentially, to see how I can bring you value. So that's one touch point, or to reach out and say, hey, just thought about you. I want to check in and see how you're doing. And that allows you to build a rapport as well. And building rapport has allowed us for ourselves, when we're going direct to owner, to be able to get the upper hand over even brokers that are looking to get in touch with these individuals. So yes, the fourth is meeting with property management companies to get their insight on the specific, not only the market itself, but also the sub-market. So the neighborhood that you're investing in. So when we met with local property management companies, this one that we met with helped with the due diligence on the property, meaning that they helped us walk all of the units once we were under contract and put together a budget. And also they gave us insight to where if you put this amount of capital into it, for the renovations, and these are your upgrades, these are the rents that you can go for. So that allowed us to reverse engineer and in our underwriting assumptions, have a more clear picture of what our return on our cash is going to be that we invest into the property. So meeting with the property management companies helps truly. And when we entered into Louisville, Kentucky, we actually did third party the property management. Didn't end up working out, but I'll get to that in another point. So just meeting with property management companies, that was a lesson learned to really assist with understanding the sub-market, and they'll give you some good tips whether or not that the rent that you're going for, that the specific submarket will be able to absorb it. And you can also get those stats by looking at the median income to determine the rents that you're pushing your property up to. Well, people can actually pay that. So those are things that you are vitally important. But the property management company will help with that, but it's good for you to do it on your own as well. So that is on the meeting with the property management companies. And then the third is, The fifth point is staying close to home. So, as I alluded to, the third party property management company did not work out. We had to end up firing them about 3 months into the process. Well, good company. It just were more hands on during the process. And by close to home, this Louisville, Kentucky is an hour and 45-minute drive away. So once we decided to part ways with that property management company, it's not very difficult for us to self-manage from our main headquarters that's in Indianapolis, and actually make the drive there on a weekly basis with our team to ensure that the crews that we have down there that's completing the renovations and the construction, that we're able to oversee that, versus if the property was a little bit further away, then that would have been a little bit difficult to either make the drive or to catch a plane to constantly go out there and manage everything. And so, yeah, that's on the be close to home, which all of the markets that we really like, we want to be within about a 2-hour drive, so we can always make that commute, especially on the acquisition side. When we want to meet with the owner, it's not that far of a drive. And then also from a self-management standpoint, that can make an easy commute as well. And having the benefit of having apartments at scale, 75 units plus generally, is you can have the economies of scale, meaning that you can have two people on site, whether that is a property manager / leasing agent, and also a full-time maintenance on site, versus the smaller you tend to go with your apartment, the more difficult it will be to support that staff financially, essentially, and it'll cut into your expenses of your property. If you bought the property cheap enough, yes, it can sustain that, but the people may be a little bit bored if it's a 40 unit and you have a full-time property manager on site and also maintenance. It may just not be enough work for them, and you're paying more than you need to. So there's that on that side. And then the last is, it just takes time on these. So how many do I have? Yes, 6. It takes time and patience dealing with these mid-size apartments, I would say. So from the initial time we identified that this property was of interest to getting in touch and then closing, was about a 8 to 9 month time frame. So very lengthy and can be longer cycles. For some people, if they do have cash, yes, the cycle can be a little bit shorter, but still, it's normally a longer cycle, versus on the single family side, would be able to close in, I would say, no less than 30 days from the time of identifying the property to then actually taking it to the closing table and having possession. So just longer cycles and longer deal cycles or sales cycles, essentially, because from this is, even though you're buying, and this is a lesson that I've learned too, is even though, and this could be a 7th lesson, even though that you're buying, you're still selling. And what I mean by that is, you have to sell the owner the seller why you would be the right buyer. And you can do that by showing your track record, showing your proof of funds, showing your management team, to really give them assurance that you're the one to close. Because that's what's going in the back of their mind, is they don't want to get all the way, sign the contract, it gets 90 days in and you're not able to get the funds from the, let's say you're going through a lender or a hard money lender, or maybe Fannie or Freddie agency debt, or maybe you just are going the cash route and you don't have the cash to do either route. And then they've invested all this time, they disturb their tenants, and then you're not able to close. So those are those points there. I know I just breezed through them. Hopefully everything made sense. But yeah, I'm gonna just run through the lessons one more time. So the first one is knowing the market. And knowing the market is understanding the economics within the big picture, population growth, job growth, that there's diverse companies that are headquartered in the city, and that is not heavily reliant upon, let's say, manufacturing or healthcare. In the event one of those happens to take a hit, that you're not losing quite a bit of your tenant base. Give those likes on Facebook. I love seeing those come in. I see some wows and some love, so keep it going. Gets me super jazzed up when I see that. So yeah, knowing the market, and then also knowing the sub market as well that you're investing in, the meaning the neighborhood. So if there is, you want to check the crime, you want to see also that understand where your tenant base is coming from. If your tenant base is coming from one business, and that's 80% of your tenants are coming from there, in the event that that organization decides to relocate, you've just lost 80% of your tenants. So ensure that that's diversified as well from our standpoint. That's why we like to avoid the rural areas mostly. And yeah, the crime, as I alluded to, and also understanding the median income to ensure if you're pushing up the rents that submarket can absorb that. Second is going direct to owner is the way to go. That's where we've just had the most success and less competitive on that side, and not getting into the overbid and overpaying frenzy that most people do. Because right now we've seen individuals, especially in Midwest markets, that are coming from maybe the West Coast or the East Coast that they see the yields that are offered here. So they're willing to pay a little bit more because they're not able to get that from where they're from. And it's the same thing with international as well that's coming in. And then the third lesson is to be persistent. So being persistent is, it took 6 attempts just to get in touch with the decision maker of this property. And that was just to get in touch. They were not interested. And then it took multiple follow-ups after that to then convert them from not being interested to then being interested. And then it took an additional 5 months to then close the property. So that is persistence all the way throughout. The fourth is meeting with property management companies to really get insight on, if you're looking to do a value add play and push up those rents, they can really give you an idea of, okay, these are the types of upgrades and amenities that you may have to offer for us, since we're dealing with apartments, in order to get these rents that I am comfortable that from the. And also, when you're coordinating with the property management companies, ensure that they have experience with the types of apartments that you have. Meaning, if you're coordinating with the property management company that has, let's say they're managing 3 single family houses, you're trying to get feedback on the rents on, or a better understanding, insight on a 80 unit apartment complex, they may not be the ideal candidate to get that from. You want to go with someone who has experience with that type of asset. So coordinating with property management companies has been crucial and huge, because they have tons of insight knowledge. And the second to last is to stay as close to home. From our personal experience, has gone a long way, especially since the property management company that we ended up going with, just due to the quality of work, the speed, the costs, and also the transparency on exactly what was getting done. All those elements just decided to part ways, and now we're able to oversee that project and still feel comfortable and be able to make the commute, because it's only an hour 45 away from our headquarters here in Indianapolis. So close to home is a big lesson that we learned, and luckily that we were able to implement that and stay with the market that's not that far. And then the last lesson was, it just takes time and patience. So as I alluded to earlier, it took it was from start to identifying the property to then actually closing on it was just under a year, 8 to 9 months. So can be very lengthy. So don't hesitate to ask your questions. I know I see a few questions that have came in here, and those of you who do share the stream over on Facebook, I will be picking 2 people to join my 31-day challenge that I put together for completely free, no charge to you, where you'll be able to work personally with me, and I'll really hold your hand along the process of finding your first deal or even your next deal, so you'll have all the tools. So let's go over a few questions. How did you find the owner contact? So everything is public record relating to real estate. Let me go ahead and turn this down in front of me. Everything is public record relating to real estate, meaning that you can go to your assessor's office, or majority counties do have a website where you can type in the address. Let's say it's 456 Main Street. Gosh, always super generic name. But you can type that in, and then you can see who the owner is of that property, whether it's in their personal name, which some mom and pop operators do quite often, or it's in a LLC, which if it's in an LLC, you can then Google search the LLC to find who the manager, principal, or owner is associated with that LLC. And then normally let's say you do that Google search, and you can go to, let's say, bbb.com or it's not org, one of those, that once you go there, you can see their contact information and their name. And then that's where you just give them a call. So that's the process. It's some detective work sometimes if it's a spider web and you have to really jump around. But majority of the time, it's relatively simple. Just the power of Google is just phenomenal. So that's one question. How did you fund the deal? So great question. So great one in terms of that one. This deal was funded by investor partners. So the total purchase price on the 80 unit was very cheap. Got a steal on it. Still feel like there is a cop somewhere that is going to take me to jail for the price we got this on. So bought for $2.25 million and raised over just over $1 million to take care of improvements. So yes, it did need work, and it was under rented by about $75 to $100 per unit. So and that was all coordinated through the property manager, and they feel that there's even more room for growth since Louisville, Kentucky is a little bit behind in terms of it's experiencing quite a bit of rent growth as of late, and it's a couple steps behind most other markets, which is a good thing because there's the upside. And how it was funded? So what we purchase price was just over $2.25 million, raised over $1 million to take care of the improvements, and 75% of that $2.25 million purchase price was funded by a regional bank, and then the remaining was put down with both of my partner and I's cash and also investor partners. And then the investors in exchange got equity out of the deal. So straight equity split, no preferred returns, no hurdle rates, nothing too complicated. Just kept it very short and sweet on that side. So yeah. That is it in terms of the questions that I see rolling in. I know there's some more that are still coming in on Facebook and also on YouTube as well. But do not hesitate, if I weren't able to get to all of them, to reach out to me on Facebook, or also I'm on biggerpockets.com as well. Just slide into the DM, which is direct message. For those of you who do not know what that is. See another question that is, how did you get started? How was that first deal? Or actually, how was your first multifamily deal? So that first apartment was 46 units. That was in 2017, in which 46 units, and the seller, that one was found through Driving for Dollars. And Driving for Dollars is just and finding properties that meet your criteria. For us, it was apartments that needed work that were on the south side of Indianapolis. So found one that needed some love. Gave the owner a call directly, and this was all public information to get his contact. And then from there, managed to be motivated because this was his last apartment that he owned. And so through that was able to get seller financing. And seller financing meaning he owned the property free and clear. So the purchase price was $900,000. $200,000 needed to just be put down to secure it, and to acquire it, and then the remaining $700,000 was provided essentially in a loan, and a mortgage was taken out on that. And then $685,000 was raised to take care of the capital improvements on that property. So, and that was the very first apartment right out the gate. So, went from single family homes, which was about 150 or so, which was owned at the time, straight to a 46 unit apartment. I would say it's a lot more easier or worthwhile personal experience and personal opinion to purchase one single 46 unit apartment complex versus 46 single family homes. I can tell you it's definitely a different animal, and managing the 46 unit apartment is more seamless than the 46 single family houses, because you have one request that comes in to all these multiple houses throughout the city versus you have all 46 units in one location. And then also purchasing all 46 single family homes, for instance, is you're dealing with close to about 40 different sellers versus with the 46 unit apartment, just one buyer. So took a step back just personally and decided that looked at the pros and cons associated with single family and also multifamily. It just made more sense for our long-term philosophy to make the shift entirely to multifamily. So I do truly appreciate everyone who jumped on here. I will be picking individuals to win to be joined in the 31-day challenge that I put together. And the same thing for everyone who is on YouTube as well. So thank you so much for your time. Enjoy the rest of this phenomenal day. Thank you. All right. Okay.